Good morning. This is Robert Sijpesteijn bringing you this morning's market update. After yesterday's flash crash, dubbed Black Monday, caused by a massive sell-off of Chinese equity, we'll start by looking at the effects caused on US indices, which saw huge movements on the open. The US 500 dropped to a low of 1,834.23, after which it recovered 60 points to close down 3.4% at 1,894.23. The US Tech 100 saw a low yesterday of 3,906.13, however recovered to close on 4,036, down 3.15%. The Wall Street Rolling saw the largest drop, down 1,000 points after the open to a low of 15,254 and closing at 15,886 after losing 3% on the day. All markets out of hours have begun to recover, recuperating some 2% of the loss that was suffered yesterday. In corporate news, an email from Tim Cook to Mad Money television host Jim Cramer stating, "I get updates on our performance in China every day, including this morning, and I can tell you that we have continued to experience strong growth for our business in China throughout July and August, helped to save Apple nearly $80 billion in its market value amid the China-induced slide on global stock exchanges on Monday. After the company's stock started the week 10% down following the Black Monday, Apple's chief executive insisted a rare intervention that consumer demand in Apple's most important growth market remained strong. The world's most valuable company clawed back $78 billion in market capitalization it had lost earlier in the day. Moving over to commodities, prices continue to tumble as the yen has taken on the name as a new safe haven. Gold has benefited this month on raising expectations that US Federal Reserve will hold off on raising interest rates next month, boosted further by investors looking for a so-called haven for their cash amid the global equity market rout. Gold inched up 6% this month, however suffered yesterday, falling $8.4 to close down on the day at $1,153.8. Oil has continued its slump, yesterday losing just under $3 to close at $42.46 a barrel. Growing signs that the oil glut will continue has unnerved traders and investors. However, China is spreading the real fear. The country has been a bigger contributor to oil demand growth than any other in the past decade, so any slowdown in the Chinese economy may spell bad news for crude consumption. The US shale industry has also been more resilient than expected, as has the output from other non-OPEC producers. Meanwhile, members of the OPEC producers cartel, such as Saudi Arabia and Iraq, are pumping at near record rates. Taking a look into Europe, the UK 100 dropped 235 points to close down at 5,877.1, while the Germany 30 shed 600 points, however recovered throughout the day to close down 250 points at 9,701.8. As the Chinese rout continues today, European shares and US index futures are shrugging off a further fall in China's stock market, as some investors see value after the recent sharp declines. The somewhat calmer mood is supporting commodities and reducing demand for havens such as the yen and core government bonds. In European corporate news, one of the largest deals to date in European insurance looked set to get the green light on Tuesday after Zurich tabled a £5.6 billion indicative offer for RSA, which the FTSE 100 bid target said it would likely accept. The two insurers disclosed on Tuesday that the Swiss group had proposed paying 550p a share in cash for RSA, which the UK company has said it had indicated to Zurich that it would be willing to recommend. RSA shares closed up nearly 1% on Monday at 495 pence. The only rises on London's blue chip exchange amid a China-inspired stock sell-off. Despite the positive outlook on this acquisition, yesterday's global stock sell-off could find its next victim in this year's booming market for mergers and acquisitions. Deal-making activity, which was on track to pass $3 trillion this year and potentially surpass 2007's record, may slow down as the wave of selling erodes executives' confidence in pursuing growth via M&A or initial public offerings. Deals with some stock component, which account for more than half of all pending takeovers, could be particularly at risk. In today's other corporate news, Petrofac reported revenue of $3.2 billion for the first half of 2015, and Antofagasta reported revenue of $1.8 billion for the first half of 2015. Today's data in focus at 9:30, the UK releases its index of services for July, and at 2:45, US market PMI composite is released for August, while at 3 o'clock, the US new home sales is released for July. That's all for today's market update. Thank you and goodbye.